Thank you, Theo. I like how you said the name of our show. I'm Jack Farley, joined by Max Wiethe. We are monitoring the situation live here on Monetary Matters. Just want to give an at the outset a sense of what we're looking at, Max. We got a very news-packed day. We have a new chair of the Federal Reserve. The long 30-year bond yield is at the highest it's been in close to 20 years. And there just was a short report on NVIDIA that was published. Obviously, like so many people watching, we're very interested in that company, biggest company in the world. And you and I, particularly you, have a lot of experience in the short selling and short report activist short selling world. So we're going to get into all of that. First, we are joined by a very special guest, Rebecca Kacaba, CEO and co-founder of DealMaker. Rebecca, welcome to Monitoring the Situation.
Thanks for having me, guys. Great to be here.
All right. Well, I want to kick things off. As I told you before we went live, I'm a bit of a capital formation nerd myself. I've been tracking this growth of access to private investments, hedge funds, alternative investments through things like Reg A, Reg D. It's been happening for a while now. You're really starting to see it take off. How much has this market grown since you launched DealMaker?
It's been incredible, Max. And of course, I'm a big fan of it myself, having built DealMaker over the last 8 years. Our vision is that everybody in America should own the brands they love. So you walk into the grocery store, you pick up your favorite bag of chips, you scan a QR code, and you own that bag of chips. And I can tell you, when I left my law practice 8 years ago, most people thought I was crazy to go into building retail capital, but really had a vision of everybody being able to own the brands they love and moving towards this democratic ownership economy. And it's great to see so many different things happening with Elon and SpaceX and their retail commitment, and now Hunter and Spirit Airlines. There's so much momentum picking up in the market where people don't think we're crazy anymore. They're starting to understand the message.
What's happening with Spirit? You're tuning me into a new situation here that I have not been monitoring. What's going on with Spirit?
Well, there's been over 300 million in pledges for the people who use the airline to buy the airline. And this is the type of thing, it directly references what we did with the Green Bay Packers a number of years ago, where people can own the brands that they love and the brands that they use in their life. And so it's interesting to watch the Spirit Airlines situation play out. But as Scott Galloway commented, he is predicting, and I fully support, we are in an era now in the next 12 to 18 months, you're going to see the community buy the brands that they want to exist in the world. That's what we do every day already. And so you're just going to see it happening with bigger and bigger brands.
So on the IPO side and everything that Elon is doing, traditionally bankers have kind of cautioned against having too much retail, kind of seen as a bit fickle, not able to have the ability to hold through some of the volatility that can happen post IPO. Obviously, GameStop and the meme stock revolution really brought in this idea of diamond hands. From your perspective, I mean, you've been helping companies raise money through Reg A, Reg D, and there isn't quite the liquidity there. When things turn down in the economy, are retail investors able to hold these private companies, or are people kind of rushing for the exits?
Yeah, Max, I think that's a great misconception the market has had for a long time. And now that we've been in business and doing this for a number of years, a number of our companies have IPO'd. And what we see is that retail actually buys and holds longer in a lot of cases because they have a brand affinity. And so they do buy and love for the brand. We saw this with Disney and what was happening with their shareholder situation with Bob Iger, right? Where you have people that love the brand and can form a really powerful movement. And so particularly what we have found is that in cultivating that relationship between the retail investor and the brand, we can build more powerful brands. So we'll have retail communities that are beta testers for new robotics projects. For all of our businesses, they're posting organically on social. You've got customer lists coming in and supporting Books, an amazing flower delivery company. All different types of brands that are activating their communities. And in the world today where brands are built online, this is a huge, enormous, powerful aspect of strategic capital.
Now, I think it's SpaceX is reporting like 30% of the IPO to retail, 22.5 billion. What, in terms of retail allocations to a capital raise, like what's the biggest that you guys have done?
So what we've seen, I've been in the capital markets my entire career, and in the early days, it was always a 10% or so retail allocation. And what you're seeing and why we're getting so much press lately is you've got Elon with SpaceX saying they're going to go up to 30%. And you've seen companies like Bullish, OpenAI on their last round allocated 1 billion and got 3 billion of retail interest. Why are they doing this? Because they know that retail can form that love of the brand that can really powerhouse a brand. So where we deal with private companies, we'll regularly do a $75 million retail offering up to the cap of Reg A.
Okay. And so there was also some news that came out in the past week or so about Anthropic said, hey, if you are trying to get access to us through an SPV, we're voiding that. This is not approved by us. And they even went out and listed some companies, did not see a DealMaker on there. So are you working directly with the companies every time you guys are raising capital, or can somebody who has, a block of shares come list it in an SPV through a Reg D offering or something like that?
Yeah, you got it. We work directly with the companies, so straight equity into a company only. You're right. There's a lot of different shadow type entities, SPVs, that have been created in the market, and that's where I think you have to be a little bit careful because the disclosure on those aren't the same. Everything that we're doing is for both accredited and non-accredited investors. So everyday Americans to own the brands they love, to actually be an investor in a company in a way that the company is facilitating.
So 75 million for OpenAI through the Robinhood venture. Obviously, OpenAI, we hear about the capital that's being raised. It's billions and billions and billions of dollars. So put me in the company's perspective. Why would they be doing this to get 75 million when it seems like there's unlimited demand?
I think for a lot of them, it's about having that direct relationship with the community that they want. So a lot of times they're giving them perks, discounts if they come to the platform, all kinds of different things where they can really get people invested in their story. And that's what DealMaker really helps the founders facilitate. So it's a strategic form of capital that they can use and leverage to their benefit.
Okay. So you said some of the companies who've raised on your platform have IPO'd. What have been some of those IPOs and names that people would recognize?
Yeah, there's a lot of different NASDAQ, NYSE companies. Newsmax was a big one that happened this year where the community of that brand really got to be the investors prior to the IPO and then immediately on the IPO. So they actually did it as a direct listing because they said, hey, we want to be actually powered fully by our community.
Okay. Now, what about the trends in terms of what companies? I feel like Reg A in particular, you definitely see when things get hot, companies pop up in specific sectors. What are the hot sectors right now? Who are trying to tap in to retail capital?
We see a lot of robotics companies, technology companies. There's always a healthy flow of real estate and then, consumer facing brands as well. Really exciting companies like Tokyo Pop, Anime, where they've got a huge community following that can become owners in that brand. They're already purchasing the brand. So why not also benefit from the fact that you buy their products?
Rebecca, in terms of the mega IPOs, we've got SpaceX that's coming up. What do you think and what are you hearing on the timeline of Anthropic and OpenAI?
I don't know that I have anything special to share on that. I think what's key for us is that the more time goes on, the more of these offerings we're seeing putting a larger allocation towards their retail book. And I think that's a trend that we're just going to see continue. I know you had Vlad from Robinhood here on the podcast a couple of weeks ago, sharing the exact sentiment where what we're seeing is more retail allocations on the IPO, but that's also translating into the private markets and into the earlier stages. And as people realize these benefits from retail capital, there is definitely going to emerge in time I fully agree with him, where every single company has 25% of their early stack allocated to retail because they can garner those benefits over time. It's the same as the stock option plan, right? In the 60s, stock option plans were not typical. And now people said, hey, if we give employees a bit of an ownership interest in our company, we're actually going to see them perform better. And they did. So people now continue to allocate stock option plans, and every company has one. It'll be the same trend with retail. We're just in that era where democratization of access is hitting from so many different angles.
And because it's an IPO, there's no restriction on the amount of retail money that they can take, right, at that IPO level.
That's right.
But what about at the pre-IPO level, right? 75 million for Reg A. Obviously, Reg D, there's a certain number of retail investors you can take, and that just kind of definitionally limits the amount of money. But there's a lot of talk about retail being kept out from these companies at earlier stages. You come from a law background. I'm sure you're paying attention to what's happening on the regulatory front. I mean, do you think that we're going to be past Reg A in the near future and moving towards unlimited amounts of retail capital?
Yeah, that's what we've long been talking to Washington about. And I spoke at Congress around this time last year to illustrate to them that we don't think there should be any kind of cap on Reg A, because if you look at what's happening with Spirit Airlines, right, they can actually form a bid and put something together if there's no cap on Reg A, because the amount of capital that's there waiting for them, over 300 million in pledges, they can then use Reg A. And so the cap on Reg A is really what's preventing unaccredited investors from getting access to more opportunities, which we at DealMaker are here to say, we don't think that's fair. We think everybody should have access. Everybody has access to the prediction markets. So not giving access to people in legitimate companies that are building businesses is just nonsensical.
Now, there is some precedent for that too, right? We had Reg A, the 75 million that you're talking about, I believe a lot of people refer to as Reg A plus. So are we going to go Reg A plus plus? How is that going to work?
Well, under the rules, they undertook to review these exemption limits every 2 years, and the exemption limits have been raised. Reg CF was raised in the last couple of years, and that's why it started to actually become a useful tool. So you're right, Max, there is precedent for the regulators to look at this and say, yep, the exemptions are working, and raise the limits so that more capital can flow, which is good for the capital markets, good for access, good for democratization.
All right. So what is let's let you pump one big capital raise that's going on right now on the platform. Who's raising money on your platform right now that you want to share about?
We have we have over 100 live raises at any given time. They're all white labeled, so they're all running their own stories. Some of the ones that I've been really excited about: EnergyX, lithium company, creating the opportunity for more mining activity to take place in America and bringing new technology to the market.
All right. Well, Rebecca, we'll leave it right there. Everybody can go check out your company, DealMaker. Do you have an app, or is it just the website?
The website is dealmaker.tech.
Dealmaker.tech. All right. Well, Rebecca, thank you so much for coming on the show.
Thanks for having me, guys. Great to be here.
Thanks, Rebecca.